Hello and good afternoon, everyone. It is Monday, September 28th, and we're going to be doing another program for the COPEC Daily Financial Wellness Webcast. My name is Jay Linder, and I'm president of COPEC and one of the founders. And excited to have us with us today, as always, every 2 weeks, Jill Spradlin. And today we're going to talk about, Jill's a CPA, and we're going to be talking about self-employment issues today. So I wanted to go ahead and just review a couple things with you. Disclosure there, want to make sure that you take a look at that. You can also see this on the copeceducation.org website. At the bottom of the page, there's a disclosure section. You can click on that. A lot of this talks about COPEC speakers, affiliated companies, board member affiliated companies, and things like that. And so appreciate you taking a look at that. And that's it. So we'll go ahead and turn this over now. We're going to get Jill involved, and if we could have Jill join us. And again, today's topic is really about self-employment issues. And Jill, wonderful to have you join us again today. And so what are we going to talk about a little bit today here for the self-employment issues?
Well, it's great to see you, Jay. My name's Jill Spradlin. I'm a CPA working here in Dublin and with an office in London, Ohio as well. We are going to talk a little bit about self-employment taxes. We have a lot of people who are entrepreneurs or forming new businesses come in to see us, and they have a lot of questions about what they need to do for their tax program now that they're going to be responsible for all of it and not have an employer withholding and remitting taxes for them any longer. A lot of these issues apply to somebody who's just doing something on the side as well. There are still tax issues involved even if you keep a full-time day job and are doing a little something on the side. So a lot of the same issues. It's a kind of a different world out there. As you and many other people know, when you're self-employed, it's very different than just being an employee. So there are issues with income tax. There are some issues with self-employment taxes, which is Social Security and Medicare on income you have from self-employment. There are state and local issues as well. And then if you have other employees, that's a whole nother level of taxation that has to be addressed.
I saw a commercial the other day. I can't remember what the company was, but it was something like a nanny company or something like that, where they were reminding that, you know, if you hire somebody to take care of your child or something like that, that there's taxes due. You know, I think a good starting point is to remind everybody where self-employment applies, right? I mean,
Right.
This is applicable to everybody that is doing a business, correct?
Yes, everybody who is in business for profit is going to have to report and pay taxes on those profits. And if they have other employees, they're going to have to pay employer taxes and things. And there's some compliance issues that go along with that. That being said, like you said, even people with an in-home worker, a nanny, an au pair, what have you, can run into employment taxes if they pay very much at all in the course of a year. So a lot of people aren't really aware also of a workers' comp obligation if they're having someone working in their home. So,
right, okay.
We try to go over all these basics with a new business owner or somebody thinking about forming a business, because a lot of it's the first time they've had to deal with a lot of these issues. So. Federal taxes, obviously you have income tax, where we're all familiar with income tax and filing on a tax return. Well, something people are less familiar with are Social Security and Medicare, because it's so automated when you're an employee. But when you're an employee, 7.65% of your pay is withheld from you for Social Security and Medicare, up to a certain limit. Above that, above about 100, I think it's about 135,000 or something now, it's just Medicare tax. But half of that is withheld from the employee, and the other half the employer pays for an employee. When you're self-employed, The bad news is you get to bear all of that tax yourself. So it in fact is doubled. And you have to calculate the taxes paid on the profit after all applicable expenses. So it's on net profits. And you have to calculate that and pay that for a sole proprietor. That is paid on their tax return along under their social security number, along with their income taxes. Something a self-employed person has to be aware of is that quarterly estimated payments are required, so that you can't just calculate and pay that tax at the end of the year when you file the return.
Yeah, and that's kind of interesting because, this whole thing, so many people want to do work on the side, and it's really critical to make sure that people understand that you have to pay these taxes. A company that you may work for, like you mentioned, they have the same obligations. They have rules and requirements that they have to do for all their employees. And if you're an employee, they're coming to you and saying, we're going to pay this, we're going to withhold this, we're going to do all these things for you. If you are under this, if you're going into self-employment, obviously, if you're going to start a business with other employees, you have to definitely consider all these things. Not that you wouldn't by yourself, but for people that are by themselves, you have to take out, because you are a sole proprietor or whatever it might be, you have to have a heightened sense of all of these rules and laws. Nobody's going to babysit you the way they do at a company. They're not going to do it for you. So either you better get on top of it, or you need to hire somebody to help you stay on top of it. But there's nobody out there that's going to do it until the IRS sends you a notice and says, hey, by the way, you did all this wrong.
And they're going to be a year or two catching up with you, the IRS is, or the state of Ohio is. And so you have a lot of time to dig quite a large hole by the time you have all these overdue taxes. So it's very important to get on top of it and to figure it, calculate it, and remit it periodically as you go.
From your experience, from your experience, have you seen a number of these examples that unfortunately you dig into this and you're like, hey, you've really got to correct this very quickly, and for people that are looking at this, get ahead of it. But do you have any examples of some things you might have seen, obviously hiding the information, but just generically that,
or just kind of being lackadaisical about it, because the government doesn't, it's a honor system, and the employee reports their own income. And if you're behind for quite a while, the government doesn't realize it. So by the time you catch up, it can grow to quite a number. The tax rate is fairly high on self-employment income because you have regular income taxes as well as Social Security and Medicare. And if you don't remit those, or if you have to collect sales tax from customers and then you don't file and remit that, they take an extremely dim view of that. And they will start adding penalties and interest that can double the tax that you owe, and they can and they will, and they are very aware of the deterrent effect of really having high penalties for not remitting things like payroll taxes, estimated taxes, sales tax. So they set the penalty rates quite high to be sure they get the attention of the taxpayer.
They don't say, oh, you're brand new, you didn't know, or
not too much.
Yeah.
Not too much. Yeah. So I've literally had, like somebody call me and say, there's an IRS guy at the shop door with a padlock and he wants to lock the place down unless I give him a certified check for $50,000, and it takes a while, but it does come to that. So.
Yeah. If you go into self-employment, which is a phenomenal thing for a lot of people to do, I mean, that's the dream for everybody to work for themselves and to really do that. But it does take quite a bit of responsibility to make sure that you cover all of these bases. Not even to exclude things like all the insurances you need, liability insurance and protection on vehicles and workers' comp. I mean, so there's a lot of things you need to consider when you do this. So
I think the thing to remember is that you're more on your own. It's more of an adult position, if you will, when you're self-employed, all these things are your responsibility now. They're not some employer that's taking care of all these aspects of compliance and taxation for you. You have to stay on top of it. You have to be aware of what your obligations are. And if you're not able to keep up with all of it, you need to get help.
Yeah. What about, so you talked about like federal, on your income, then your Social Security, Medicare, you got to cover both sides of that, and you need to be paying these quarterly. They don't want you to just make it up in April when it's due. They want you to pay these quarterly and stay on top of it. What kind of penalties, because I think that's probably one of the big things, even if people know that they have to do it, I'd imagine that's one of those big examples of what is done wrong is people try to, they need the money to pay for other things, and all of a sudden they've delayed. Not only do you have the money if you delay, but what kind of penalties if you aren't paying those regularly?
The penalties are very severe. Not making your own personal quarterly estimated tax payments carry a more modest penalty, but failure to remit payroll taxes you can end up paying double what the actual tax was. The same way with sales taxes, they will hit you with penalties for not filing, penalties for paying or not paying or paying late, interest on accruing debt. And those things, it's unfortunate, but that's one of the main reasons small businesses go under is because they let that get out of hand. And they do direct, you have to set aside, figure out what the amount is you need to set aside for taxes and then remit that when it's due. It's not a hard thing to do if you set it up initially. The real tough cases come when somebody has let it go for 2 years or 3 years or 5 years. And, we've seen people that owe sales tax returns. For some reason, that seems to be a hard area for people to remain in compliance. So they've collected the sales tax, which was never the employer or the vendor's money. It was always from they're holding it for the customer, for the state. And that's why the penalties are so high, because it's one of the things that's called a trust tax. It was never the business's money. So when you withhold taxes from an employee or when you collect sales tax, that is not your money to even not remit. So that's viewed extremely seriously, and the penalties are highest for those trust taxes.
Oh, yeah. That makes sense because it's being paid by the buyer, not by the company. And you're You're just being the mailman, if you will, delivering the taxes.
You're performing the collection service, and when you accept and remit sales taxes timely, you get to take a 0.75% discount for your effort in doing so for the state on behalf of the state. But no, it's not your money. It's not your money to spend anywhere else, and people run into a lot of trouble with that. And where the IRS actually generally has, not for payroll taxes, but for other taxes, generally has a 10-year statute of limitations, the state of Ohio has none, period. So it accrues forever.
Yeah.
And can mess you up many years later when you've forgotten all about this small sales tax thing that you didn't file.
Right. Well, with that being said, you mentioned the state of Ohio, which is where we're at, and we will reference mostly Ohio issues here, right? What are some of the things there with the state of Ohio when it comes to self-employment?
Well, right now they have a very beneficial small business income deduction, where the state of Ohio essentially doesn't tax the first $250,000 of small business income that someone has. So a sole proprietorship or very closely held partnership or S corporation, income from those sources are not taxed by the state of Ohio up to $250,000. And over and above that, there's a flat 3% very favorable state tax rate on small business income. Those were put in place specifically to make Ohio more business friendly and more competitive with other states in securing, new and enlarged businesses. There is a CAT tax, a commercial activity tax, that kicks in based on gross receipts. Gross receipts of 150,000 or more, you have to register and file for the CAT tax. If your gross receipts are between 150,000 and $1 million, that tax will be a flat $150 a year. Above $1 million in gross receipts, then that tax begins to escalate as well.
Okay.
So those are the main Ohio issues. A sole proprietor needs to be aware also that they will owe school district tax. If they're in a taxing school district, they will owe that tax on any profits, business profits they have. And they will also may owe city taxes, municipal taxes, if they live within a city with a taxing structure. So
walk through the city a little bit more.
Well, for instance, if you're running a consulting business and you live in Dublin, you're going to owe Dublin city taxes, city income taxes on that net income. And again, it's not being withheld. So you're back to the quarterly estimated payments. So you can potentially end up with quarterly estimated payments to several taxing entities, to the federal and the school district and the city, depending on where you're located.
Right. What about other employment taxes? Can you walk through those?
Yes, if you have employees, you're required to withhold income taxes from them. You're required to pay the employer's share of their Social Security and Medicare. So those are obligations that you incur if you become an employer. And those are deducted from each pay and remitted either monthly or quarterly, depending on the total tax amount. They are all required now to be filed and paid electronically. There are no more paper filings for those types of taxes. And in fact, there are penalties for trying to send a check, for instance, to pay for employee withholding or things like that. In addition, you have to be aware that you need to cover employees with workers' compensation. So while it's not a tax, it's actually insurance, it is required. And in the state of Ohio, it's purchased from the state. There's unemployment issues as well. Unemployment premiums have to be paid on each employee. The first $9,000 in this state, the first $9,000 of each employee's pay is subject to an unemployment tax. And that it functions as insurance actually, and it's paid into an account on behalf of the employer, and then it's drawn upon if they have a layoff and an employee needs to file for unemployment. That's where unemployment payments come from. So that's required as well. Now these things, like workers' compensation, a sole proprietor can obtain that on themselves if they want to, especially if they're in, if they were doing construction or roofing, they might seriously want to consider doing so, but they're not required to cover themselves. They are required to cover any employees, and they're also required to cover any subcontractors who do not show them proof of coverage themselves.
So let's kind of talk, because I mean, obviously, the idea of people wanting to go into business for themselves and really do all the things. So not only do you have to be good at what you do, right? If you want to be if you want to start a food truck, if you want to, do, whatever it is that you want to do, you need to be good at that. But then you need to all of a sudden be good at this. For somebody who is just starting out or has been doing this, and they want to try to check out, how does somebody figure out all the things that they need to do? I'll caveat this real quick with saying, obviously go to an expert, an accounting firm, a CPA like you. But our goal is to also allow people to know that you can do this on your own. This is about providing the resources. And if you can do this on your own, How would somebody go about doing that?
Well, in their bookkeeping program, they'd want to set up something so they're able to calculate their profit and loss. And then from there, they would need to be able to ascertain what their tax bracket was, what their current level of taxation percentage is. And we have people call us quite a bit and say, how much should I set? Should I just set aside 30% of everything I take in? And it's really not that simple. It's based on the net profit after expenses, and it's based on your total picture as well, including other income, spouse's income, other household income, things of that sort. So I really would suggest that people, at least in their first year, get a little help in estimating so they learn the things to consider. But yeah, you can do it on your own, and the middle of the estimated payments is the least of it. It's calculating them that's the hard part. So the main thing is just to get on top of it early and not let it go, and then be perhaps left with a large unexpected tax bill at the end of the year, and maybe you haven't put enough back to cover it. So
Yeah, that's a good point. I mean, to really touch base with somebody who can at least do a good job helping you get set up. If you choose to hire somebody, definitely they can help protect you from things you might forget. But at least they can help you get set up and make you aware of, educate you on how to do things. I know, for example, this coming Friday, you're also doing a discussion on QuickBooks, right? So
right.
That is a key function to make sure that you're doing these things right. You're tracking receipts, you're
Right.
Making calculations. And so whether you're hiring a firm or whether you're doing it yourself, learning some of these tools like QuickBooks and some of these other things is a valuable piece in that whole picture.
Yeah, if you're going to start a business, you have to accept the responsibility to do bookkeeping in some fashion. That's just it's just a necessary part of that. How much of that you delegate to somebody else is up to each individual business owner. I would just say the other thing is that when you're starting a business like that, you need to take into account all these costs and the taxes and things when you're setting your own pricing. You need, in determining whether the business is viable or not, you need to understand whether you can charge enough for your services or goods to cover those expenses, because those expenses are going to occur. So there's no point in underestimating that and then finding that you're working hard and not making a profit. So
right. I think I find that a lot of people think it's like, oh, I can charge this, and it's like buying I don't know, sometimes you go elementary, right? Let's go elementary for a second. You say, to your teenager, yeah, you can buy that car, it costs this. Okay, but then you got to put in insurance, fuel, repairs, da-ding, 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 all these different things. And it is not as simple as it seems on the surface. Right. And that doesn't mean it's not doable and you can't control it and you maintain it, but you can't say, oh, my time, I can do this and I can charge this and I'm fine. You better start chunking away all the different things you have to do to that. Make sure that, you are putting enough in there.
Right.
And not getting caught in the back end. Business will go out of business just because they forget to charge enough for their services and build it all in.
Right.
Yeah. Well, hey, this is a real important, and I'm a big advocate of people who start their own businesses, and it can be anything. It could be, online service out of their home, or it could be, doing landscaping or whatever it is. Even if you want to get employees in there, that's what makes this country run. And so it's great for people to fully understand what they're getting into. It's very doable. It is not costly to get advice and to get help. When you take a look at the big picture, right? If you're going to bring in, $100,000 of self-employed income or whatever you're dealing with here, the cost to do it right and get that support is minimal. compared to the ramifications if you don't do it right. I'm not saying to specifically use Jill or anybody, but stay on top of it, whether you do it yourself or get that help, because it is a great, great piece of education you can do for yourself and get that set up right from the beginning.
I would give a little shout out maybe to the SCORE. I don't know how much they still do, but they used to do quite a bit there in the Columbus area. It's the Service Corps of Retired Executives. And sometimes you can, if you're fortunate, get hooked up with someone who had the kind of business you're considering. And that's invaluable just in a lot of ways, not just for the concerns we've discussed, but other management and structure type things.
And if you're thinking about, first of all, people like you and many others, you're an expert at this. Don't hesitate reaching out and getting a little advice. If you need to get some, if you need to pay for some things, if you need to go ahead and let's say you've even been doing this for a little while and you want to have somebody review it, whether, it's a minimal cost, I'm sure, just to have somebody review what you've done in the past, just to poke holes going, you might want to check this out, or you forgot to do that, or where is this? And it really brings to light maybe some of the things you've been doing wrong, and you can go back and fix them sooner than waiting too long. So
yeah. And I would also kind of caution people, if they're thinking about forming a partnership with other partners, you really need to set up articles of the organization through an attorney. It's just a must if you're going to involve other people. It saves so much grief down the road if you set things up properly.
Right. Well, I don't see any questions. I definitely would like to continue to remind people to go ahead and send questions. We can definitely make it part of our conversations. Don't see any here today, but Jill, thank you so much for sharing with us today.
Thank you, Jay.
Excuse me, some insight here on self-employment. And we're looking forward to having you speak this Friday at 11 o'clock on QuickBooks. And so definitely want to make sure people that are looking, whether you work for somebody, you want to just learn how to use this system, it's a great system. And so thank you so much. We'll see you at 11 o'clock on Friday. And thanks everybody for tuning in. If you have any questions, send us a note and we'll be happy to help out any way we can.
Thanks a lot.
So thanks everybody and have a great week.